Hello, hello. Excellent. Good evening, everyone. Welcome. We appreciate you taking out the time to join us at this event today. My name is Fabian Durango. I am the Regional Director of LORE, Latinos of Real Estate, for the Greater Stanford region. I'm a proud member of this organization along with my board members. I want to take time to thank Mayra Rios, our event coordinator and education coordinator, for putting this event together, along with Handy, Luigi, thank you, Handy, and Waldy, also our sponsorship director, Danny, and the whole Latino of Real Estate board. We are a family, we work as a family, and our mission is to serve our community. I have the pleasure today to introduce a dear friend, our narrator, the person who will be taking care of asking all the tough questions to our professionals today, our moderator, Roxana Rivera Bayhar. We're going to get it right. You know, she has those fancy European last names. We're going to get it right one day. A little bit about Roxana. Roxana has learned leadership through her upbringing in the Bronx, New York, from her dad, who was the president, and her mom, the CEO of the Rivera household of 4 children. I can relate to that. She is the past president of the Stanford Board of Realtors and is the first person to serve a 3rd-year term as president. Also a proud Latina to break that record. If you guys don't know, March is Women's International Month, so go Roxana, you're representing us amazing. She's also a realtor at Keller Williams Prestige Properties in Stamford, Connecticut, and a Connecticut Realtor Board of Directors since 2019. You can find Roxana throughout Stamford and all Connecticut, enjoying the outdoors, family, wine, food. Sometimes you find her in her Peloton, reading a book, and filling in the blanks of life. Life is not easy. Running a business is not easy. The market is not easy. But Roxana has been able to be a leader in our community, be an example in our community, and we're proud to have her be a member and be involved with our board of directors. Roxana, please come on in.
Thank you very much. So thank you all. I guess I'm going to repeat a little bit of what he said because here are my cheat sheet notes. I come prepared. So I want to thank LORE for hosting the Blueprint to Financial Success. I was very honored that they asked me to moderate. Thank you, Mayra Rios and the Education Committee for putting this together. And I heard you say Handy. I don't want to forget you, okay? So let's see. And Fabian for sponsoring. Fabian Durango. Who doesn't know Fabian Durango? So thank you for sponsoring. We have 3 Latinas here up on stage with me today, and we're going to kick off Women's History Month the right way. So we have Amanda, Natalie, and Yumi. Amanda Morales is and how did you ladies sit in the right place, or did they tell you that to sit there? Wow, I'm impressed. Yeah, Amanda Morales is a financial representative with National Financial Network's Guardian's top producing agency in 2022. She started her career in investment banking and branched off to run her own book of business, specifically servicing and educating the Hispanic community and small business. We'll start that again. Hispanic community and small business owners, which aren't most of us here, Hispanics and small business owners, right? She focuses on educating real estate professionals, their clients, to protect their assets and grow their wealth through various financial stages. So thank you, Amanda. Next, we have Natalie Ocampo, and she is the founder and CEO of the Nest Agency in Westport, Connecticut. Natalie's agency offers a diverse array of services encompassing accounting, finances, tax planning, and insurance solution tailored for both individuals and businesses. So we will absolutely learn a little bit in both areas. As a licensed professional in property and casualty across 10 states, Natalie harmonizes her extensive experience with her degree in financial management to guide clients through achieving unwavering financial stability. Thank you, Natalie. And last but not least, it's Yumi Perez. And Yumi is a visionary entrepreneur and dedicated accountant. We are in tax season, folks. We need Yumi. She's precision-driven accounting and financial services to entrepreneurs and businesses. As the founder and CEO of Y. Perez & Co., she has established herself as a trusted advisor in navigating the complex terrain of taxes, audits, and financial planning. Thank you, ladies, for being here today. So let's see, I lost my notes. We're going to come back. So at the end, you will have an opportunity to ask any questions that you may have of these wonderful panelists that we have here. So I'm going to start with 1099. Let's talk 1099, ladies. Most of us are 1099 here, or we know some people who are, and it's tax season. Yumi, can you share with us, like, what's first things first? What do we do? How do we pay our taxes? How much do we set aside for our taxes? Do we pay quarterly, every time we get paid, at the end of the year? Help us along with that. There's so many different thoughts and ideas.
Is it okay? So as Roxanne mentioned, most of us are 1099, right? So for the most part, rule of thumb, I always say about that 20% to put aside for your taxes at the end of the year. If we pay, or if we know that we're gonna owe over $1,000, then we definitely should be paying those quarterly taxes. And that's always gonna help you, once you get to that end of the year as well. We should also be doing our bookkeeping, right? Because that kind of goes hand in hand with all of your deductions, all of the things that you can write off. If you're working along with someone throughout the year also, you can kind of navigate that. How can I make this into a deduction and all of that fun stuff? What else? Is there anything you'd like to add?
Yeah, I think it's very important throughout the year to just stay in touch with your finances and stay in touch with, what is it that you're spending on, so that you can allocate it and bring down that tax bill throughout the year. But if there's anything that you want to do, you definitely want to keep up with your quarterly estimated taxes to avoid penalties, interest. You don't want to give that money away. At the end of the day, it'll be a refund back to you if you do get to deduct a lot more than what you expected. So that's a good rule of thumb, 20%, give or take.
Excellent. So what I just heard is that we should separate the 20% and not keep it in our checking account, but have a specific account and said, this is my tax money.
Set that savings aside. Some people, they'll actually even send monthly payments because they'll work better that way. Or when they get a good, commission check, they'll make 2 quarterly payments all at once. At the end of the day, it's just making sure that you set that money aside, whether it's through a savings account or making them ahead of time.
Excellent. So what about pay yourself first, right? We hear all pay yourself first, pay yourself first. So Amanda, why don't you talk a little bit about pay yourself first? Obviously, we have to pay the taxes first, so we come second, I think. What are some buckets that you can recommend for financial planning?
So I think that when I'm speaking to my clients, there's various ways to do this, right? You have different types of accounts. The biggest thing that I tell all my clients is diversify, right? And that also goes for your bank accounts. So that can go for your savings accounts. You can have that diversification within your savings for your taxes. You can also have a savings for your plans for that year. Let's say that you want to go on a trip, or you want to, have a party, or whatever the case may be, save for your house, so on and so forth. That can be another savings account, as well as having that emergency fund. So you want to make sure still that you have that emergency fund put aside, because what we tend to see is that when I'm speaking to my clients, they tend to tap into that emergency fund because they only have one type of savings account. So when they need the money for the trip, they're going right into that savings account versus having that diversified bank accounts across the board, so that way you can tap into those if you should need it.
So we have a tax account, we have a savings account, and now we have a vacation account.
You're gonna have a whole lot of accounts. No, you'll have like those three main ones in regards to savings, but I mean, it's very important that, you're taking a certain percentage out of your paycheck or the commissions that you make, and you're putting it aside for the various things that you wanna do. Every single person's gonna look different. When I'm speaking to my clients, I'm gonna have different goals across the board. Some may wanna purchase an investment property, some may wanna purchase their first property, some may just want to take that vacation because they're not in that space yet. So I try to figure out from each client what is important to them, and then take it from there and try to help them diversify their accounts so that they're not pulling from what it is that is important to them, right? Because we hear a lot of financial planners telling you to cut that Starbucks, cut, all of those little things that you enjoy doing, but those can be equally as important to you because, you want to live. When you're making money, you also want to do the things that are, important to you as well. So getting them to understand the concept, okay, you do want to pay yourself, and that could be in various ways. It's not just going to be, one particular way, because if you have that goal and aspiration to purchase that home, I want to make sure that they're set up to do that. Same kind of concept when it's for just having that emergency fund, having a few $1,000s or whatever that is to them put aside as well.
Thank you. What about, I'm going to say the term incorrectly, I'm sure, but what about the cloud? You can't get to your savings. Does anybody have one of those? Because I sure don't, but I keep saying I'm going to get it. And so do you know about what I'm talking about? I know it's not the cloud, but...
I don't know about the cloud, but I
know
do
that's
know
not the right name.
different saving vehicles. There's different ways that, and that again brings me back to the different accounts that you may have, or the different financial products that you may have, because they may have different requirements on them, right? Like, let's say that you're working with, and we'll go into it a little bit, but let's say you're working with a whole life product, right? It's not as accessible as your emergency fund, right? The liquidity is going to be different. The same kind of concept when we're talking about traditional investments or a 401k, which you guys may know of, or traditional, an IRA or so on and so forth. There's so many different financial vehicles. So getting my clients to understand what they are and then also how they work is super important, and then breaking that down so that they could understand that it's something that they could do. And, the ones you're not able to touch, those are always great because it's out of sight, out of mind. They fight me on it for sure when I tell them to do it.
That's the one that I need.
Yeah,
Out of sight, out
most
of
people
mind.
need it, but they fight me on it because it's not as liquid, right? It's not something you can go into tomorrow and say, hey, I need $20, right? But that's the one that they thank me for later, because when they look back and they're like, wait, that one is the one that provides the most growth. Now they can take out X amount of dollars down the line, and they didn't even realize it was there, because at a certain point, the first 3 months, that's when you feel it. After that, it's out of sight, out of mind. You get used to it.
Thank you. Hey, Yumi, LLC, S Corp, tell us the difference, why or why not do it. What are some tax benefits, one versus the other?
Sure. So, it's important to know that when you file your LLC, a lot of people think, well, my LLC, it's its own thing. I need to file business taxes. It's not always like that, right? A single member LLC files taxes as a sole proprietor because it's a disregarded entity, right? That's how it's seen by the IRS. But basically what that means is just that you would file a Schedule C with your personal taxes, with your regular 1040. and it goes attached. Now, because of that, you have to also pay personal taxes, right, on all of that. So, as an S corp, an S corp is not an entity. An S corp is actually just a tax election. So this tax election allows you to pay corporate taxes rather than to pay everything under your personal, right? At this point, you wouldn't file with your 1040, you would file an 1120S. A corporate is something obviously completely different. Now, the last one is that multi-member LLC. Those file as a partnership. So we file a 1065 for partnerships. That kicks out a K1, and those K1s go to each individual partner, and then that gets filed with their personal taxes. And that's that.
Okay, so what's that last one that you talked about, multi-something or other? Would that be beneficial for us? Because most of us are single, if I'm not mistaken, and maybe some of you do have multiple people with you. So can you explain what that is?
Sure, so that just means that when you filed your LLC, you filed it with more than one member, right? You have more than one owner for that LLC. I wouldn't recommend it for anyone who's just starting because you're paying double tax. You know, you're paying basically to file your business taxes, your partnership, and then you got to pay again to file your personal taxes.
So if you have a 1099, can you file as an LLC if you're given a 1099?
Your 1099 would be for your LLC? Is that what you're asking?
No, just Roxana. They're paying Roxana. So if I get a 1099 and it's not paid to my LLC, I cannot file as an LLC. So does Keller Williams, I work for Keller Williams, or with Keller Williams, right? Does Keller Williams pay my LLC, or does Keller Williams pay me?
They should ideally pay your LLC so that you can maximize all your business deductions.
Okay.
Now, some people elect up to a certain point. So what happens with an LLC? An LLC gives you liability protection. That's what an LLC at the end of the day is. It separates you, your personal assets, from your business assets, right? So if you are limiting your liability to just your real estate income, then that's not, if something were to happen within that realm, that's not going to carry over to you personally. So that's why it's to your benefit to have them pay you to the LLC and run everything through the LLC.
Okay, does E&O play into any of this at that time?
Sure, it's another level of protection. So it's professional liability, which will protect you in case of any claims of errors and omission within a transaction.
So you can be a solo agent or LLC. Are there differences in the E&O insurance that you get?
So the LLC will just give you that extra level of liability protection under the E&O insurance. So, but you can also have your E&O insurance under you personally if that's how you are operating. You just have to decide how is it that you're going to operate, and then just have everything be consistent, right? If you're operating under your LLC, your E&O goes under your LLC. If you're operating individually, then it goes under yourself.
And it's my understanding that not all companies will pay you as an LLC. Is that correct? So Keller Williams may not pay me as an LLC, Roxana Byra LLC, but they'll pay me as Roxana Byra, an individual contractor, if you will.
And that's where your E&O kicks in.
Huh? I'm getting
Your
this now.
protection. You got it.
Awesome. We'd like to talk about, it's tax season, so let's talk about some tax deductions. Ladies?
So basically, I think we all know that tax deductions are anything that we use to operate our business. So whether we're traveling, whether we're buying supplies, anything like that. The other deduction that, most small businesses, especially now that we're using our home even more, I think that's one of the biggest deductions that we overlook. And we should pay a little bit more attention to the business use of our homes, whether we're using it for meetings or anything like that. We want to make sure that we accurately depict within our space how much we are truly using it, right? So with that, it's utilities, it's insurance, it's taxes that you pay, right? And that's all going to be based on percentage of the square footage used.
Also, if you guys do any home repairs that's particularly to benefit the business, those also count. So it's always good to keep that in the back of your head.
So if I fixed my roof and I have a den that I use as an office, do I get some sort of tax deduction because I needed a new roof? Oh, let's all get new roofs now. Go ahead.
Is this being recorded?
I know. Let's be real quick here. So I personally don't have a separated space.
You had mentioned that, yeah.
So I don't get a tax deduction. So let's talk about a separate space. What is that considered? Can it be a part of your dining room? Does it need to be a separate, real separate space? Can it be, that corner of the basement downstairs?
Okay. No, it's okay.
I got them on this one.
So the IRS has become a lot more flexible with the use of the home. You want to make sure that at any point in time, if you get audited, you can justify that that space is being used for business, right? So that being said, that's why we allocate certain percentage to the space. So if it is that corner of your basement, well, how big is that corner of your basement? Let's measure it out and let's take a percentage based on the square footage.
Okay, cool. Thank you. Thank you so much. When you talked about deductions and you said travel, I just came back from a conference and I've got food and I've got tolls and I've got the car ride and the airplane. Can we put that too? Can we put all of that, bunch it all as travel, or do we really need to separate tolls, car, yada yada?
I would say for the most part, I always separate it, and I always make sure that my clients separate it, because sometimes if the trip is it's strictly business, yes, you're going to put them all as deductions, but they all fall under different categories. So it's important to have that because the IRS, obviously, if there's ever an audit, God forbid, you're able to match those numbers to what you reported in your taxes.
Okay. Boy, we got a lot.
It all goes back into bookkeeping and categorization. That's why it's really important for all of you guys, if you guys want to be able to take the deductions that you guys actually, and I don't want to jump over, but I just thought of,
go ahead.
You want to have a system where you are kind of categorizing these things, because some things, you could have gone to Las Vegas, but you stayed a couple more days for
did
personal.
Not. Okay. I did
just
not
in case. You wanted to, go down
See the Grand
Yeah,
Canyon.
exactly.
Yes, I did.
So you would have had to give your trip a percentage, right? Deduction. It couldn't have been. Are we off record? But yeah, so that's why you want to try to separate things out.
Okay, cool. Thank you. So let's talk SEP and Roth. What's the difference? How does it help us? Can we write it off? 401k, who do we go to, Amanda?
So when it comes to retirement, right, a lot of 1099 people do not have that retirement planning set up, right? So it's your job to either do that, reach out to a financial professional, me, to do that. But regardless, you need to have some type of IRA, either Roth. There's two types of IRAs that you can have. You can have a traditional, or you can have a Roth, right? And the difference is, when are you paying your taxes? Are you paying your taxes, is it going to be pre-tax? Is it going to be, or it could be after tax, right? And that's what the Roth is. It's essentially after tax. So you're paying your taxes up front, essentially, so that when you pull later, you don't have to pay as much, right? When it comes to SEP, the difference there is that the account is set up so that you, each employee, you can have less employees, and each one is simpler for you to set up the plan, but every single person that you have under you has to have the same type of contributions. So, meaning, I'll break that down a little bit more. What that means is, essentially, as the employer, you're contributing the same amount to yourself as you are to your employees. So there's benefits if you're the only employer for your business, right? Because you can contribute a lot more than the Roth IRA. The Roth IRA is capped at $7,000 in 2023, whereas the SEP will be more. So you can contribute more into that plan. But where that may not be as appealing is if, let's say, you have more than 2 or 3 employees, and you're like, hey, I don't really want to pay them the same amount as I'm paying myself, or contributing, I should say, contribute as much.
You would go with the Roth if you have employees.
It just depends, right? So you can set up a 401k for your employees, which is a little bit different, and that's where you're contributing, you're essentially, as the business owner, contributing to their retirement plans. Connecticut actually passed a law where people with 5 or more employees have to have a 401k set up, or you're gonna get taxed as the business, right? So with that being said, you're gonna have to set up one of these plans regardless if you have, 5 or more employees. So it's just about which one are you gonna go with, because if you have that SEP, if you know that you're gonna contribute a lot to your personal IRA account, you may not want to contribute that same amount to Natalie's, right? So in that sense, as the employer, you may not say that's a great idea. So it just depends on every business. What are you, if it's just you may want to contribute more to your retirement plan. So in that case, you may say, sure, I'm going to do the SEP IRA because I'm going to contribute as much as I can to my retirement so that when I'm older, I can live well.
I'd rather pay myself than Uncle Sam.
Yeah, exactly.
So if I did a SEP, right, and so do I have a limit with the SEP?
Yeah, there is income limits, and every year it changes.
Okay.
The important
Sorry,
part,
contribution limits.
the important part with the SEP IRA is that it's based on the net income of the business. So the more the business makes, the more you're allowed to take as a deduction, that you could contribute to the plan up to a max. And every year it changes, just like everything else with taxes.
Whereas the Roth, it's across the board.
Yeah, it's
The Roth is 7,500.
Yeah, 7,000 in
Oh,
2023.
7,000. Okay. So can I take anything from the Roth or the SEP account? Can I deduct anything on my tax returns? And if so, which one, or is it both?
So when it comes to regular IRAs, right, the perk is that you're reducing your income, right? So when you're looking at it, let's say that, you have a regular traditional IRA. If you put the max, you're reducing your income for that year by whatever it is that you contribute, right? Whereas the deductions, that'll go more so into, they'll probably give you better advice on the deductions, but there's also a limit as to what you can do.
So if you're setting up a plan for the business, for the LLC, you get to deduct any plan fees and the contributions made. So, but you just can't double dip. So if you're taking the individual, so you're a solopreneur, right? And you're taking it on your personal side as your contribution, then that's it, right? What you can deduct on your business side is any plan fees to set up that plan, right? Or if it's a 401k or anything like that.
Yumi, we're waiting on you now. You have anything to add there?
Well, I did, but we kind of like went over that part. So I'll go back to that afterwards. But yeah, no, I feel like she actually covered the whole. I think that that thing of the double dipping, because I feel like a lot of people end up thinking, oh well, then I can put both, and then at the end of the year they get upset and they come to you with their tax paperwork of why, right? So that was actually pretty good.
More the story, either way, you're going to be taxed. It's just,
Yeah. Either at the beginning or at the
yeah,
end.
are you going to be taxed today or are you going to be taxed when you're 65? You know, that's really the big differences, right? When you have a Roth, you're going to be taxed later down the line. What is your tax bracket going to look like? When you're working with somebody that is, you know, helping you with the retirement planning, they're going to guide you to see what, you know, what your income bracket may look like at 65 or 60 or whenever it is that you're looking to retire. If your income bracket is lower now, you may want to take that now versus later down the line when you're like, well, I'm going to have a pretty penny tucked away and they're going to tax me crazy then.
Got it. What are some of the other deductions? You know, I mentioned earlier, Yumi, about traveling and taking that deduction. Can you give us some other, you being a bookkeeper, right? What other deductions should we be made aware of?
I think a lot of people underestimate their miles when, being a solopreneur or single member LLC. When we do those networking events, right, we tend to drive very far for these fun things. So that's a huge one, definitely, either put it in your calendar, get one of those little apps that track certain trips, things like that. Your miles come in very handy. If your vehicle, if you're using it for 50% or more of your business, it's also tax deductible, right? Your gas, if you're going towards, either the networking or anything that helps you run your business. Every business is structured differently. So whatever, if you're particularly at, having to bring something personally somewhere, like that also counts. We talked about obviously the home office deductions. So that includes your utilities, your internet, your electric, your gas, all of that stuff goes in there. Your rent, well, obviously portioned, right? That's why we're doing the square footage. So make sure you know how much you're really using and how much the square footage of your home is, because that's how it gets calculated. Also, well, obviously all of your office expenses. Not sure if everyone's aware, all of those softwares that we purchase to run our virtual stuff. So those Zooms, anything like that, the apps, all of those apps also count. And like I said, so it's because your business is run differently. I would definitely suggest to work with a professional, so that you can figure out how you can make certain other deductions too, or how you can make certain expenses also a business deduction. Like, what can you do? A lot of people come and ask about, like, well, how can I pay my child, right? All of that fun stuff too. So, definitely work with someone to advise you best.
Dinners, events.
Oh, those fun things too.
No, I just think that if we're going to pay taxes, we might as well just maximize what we're doing out there to get more business, right? So like Amanda just said, those dinners, those networking events, those, just those gifts, those customer gifts and all that stuff. I think it's very important to tap into all that, because at the end of the day, if you don't spend it there, you're going to spend it in taxes. So
Your office, you guys, the setup for your office, software, computers, like itself, the computer itself, that's, anything that you purchase for your business, you want to be able to take advantage of. At the end of the year, when you're purchasing a brand new laptop because yours crashed, well, there you go. It's a write-off.
And all those the big machines, right? The ones that are really expensive, we can also do depreciation with those, right? So everything that she was mentioning, furniture. If you spent a lot of money on the furniture for your office, all of that counts.
Well, there's a lot going on here tonight. We've talked about E&O, we've talked about savings, we've talked about retirement. I'm going to touch on the subject of life insurance, because that's a bucket that I'm sure many of us don't have. So let's talk about term versus whole life. And what's the difference? I don't know if everyone knows, so if you do, yeah, I kind of do, but I'd love to have your opinion on this, please.
It's my favorite topic. So, it's really important for me to stress that, in the minority community, we have these in place, these products. It's why I came into the business, actually, and it's beyond important. I also grew up in the Bronx, New York, so there was not a lot of knowledge around finance, right? Like, that wasn't, and especially around death, right? That wasn't a topic of conversation that we love to talk about. No one wants to talk about it, but it is unfortunately promised. So it's just about when is that time going to come, and how are we prepared for it, and how are we setting up our family to make sure that everything that we're doing along the way, they're protected and prepared. So when it comes to term insurance, term is the insurance that, in my opinion, if you live in the United States, every single person should have, but unfortunately it's a privilege, right? Because realistically, not everybody qualifies. It's based on your age and your health. That's how you get rated. And it also, when I'm doing my financial planning for my clients, I go based on what type of assets they have, what's their income, so on and so forth. So term is similar, and if I have some people that I work with here, they'll hear me say it all the time. It's similar to your car insurance. It's similar to your health insurance, right? We have insurance, unfortunately, on everything out there. But unfortunately, people forget to protect themselves, which is your biggest asset. So with that being said, that term protects you. It protects your family. So for me, it was really important that I took out policies like this when I was very, very young, because I didn't understand the concept of it costing money to pass away, right? So with that being said, term insurance protects strictly for the death benefit. It's to, if God forbid you predecease your assets, your family is taken care of, and then I also utilize it to plan with my clients on their future. Because people love the concept of whole life insurance. Whole life insurance is pretty much, it's a cash asset, and it's also tied into a death benefit. So the clients do have the death benefit there, but it's similar to putting money, let's say, into your 401k or something like that, whereas what you put into it is what you get out of it. You're always going to get, as long as you go with a top company, top 4 companies, you're going to get a dividend along with that. Same way that you get dividends with stock that you invest in, it's the same kind of concept. So with that being said, whole life insurance is obviously the more ideal for most clients, because especially in the real estate world, because you can have it as a retirement supplement. You can have it there, where I spoke in the beginning about diversification, and it allows you to diversify your portfolio. It can be part of your retirement plan, and we can utilize it over time for you to pull out funds from the policy while you're alive. So it's not just, that death benefit. But I heard Natalie, whispering it, but at the end of the day, the biggest thing that people love is that it's tax-free. So when you're pulling out your, you got a question?
The whole life is tax-free?
Both are tax-free. So the death benefit is tax-free. If God forbid something happens to you, the death benefit will be tax-free to your family. And then the same thing when it comes to the whole life, it's essentially tax-free. There is times where it can become taxable, but if you're working with a financial professional, we know how to structure those policies where there is no tax, really. And the benefit is that when you're pulling out, let's say $10,000, you're getting $10,000. You're not getting taxed on that. And you could utilize that while you're alive. So you can use that. Another thing is that you can use it for any purpose. So you don't have to wait till that 59 and a half to pull. You need renovations for your home, pull from your policy.
So good old Uncle Sam. We have a little something over Uncle Sam, I hear.
They don't want you to know that, though.
I won't tell. Don't tell anybody. Okay, ladies, I'm going to ask each of you this question. What do you expect your clients to be doing and or not doing when it comes to financial tax planning, record keeping, and income tax preparation? Just a short little smidget. Go ahead.
I would definitely say to have a separate bank account for your business and separate that from your personal. Never double dip, never mix them, have them two different people.
I was going to say something along the line, but I would just say, try to definitely stay organized in that sense. And if you can do it into a QuickBooks, even if you want to do an Excel of it, right? But just keep everything organized, because you know what? A lot of time people will come during tax season and, I'll just be going down questions and they're like, oh yeah, I did get that computer. Oh, but I think I paid it with some other credit card. That's why it's not here. And, so just kind of have a little organization, whatever you want to call it, whether it's QuickBooks, whether it's an Excel, whether it's that a pocket where you drop all your receipts, but just find a method that works for you.
Actually, sorry if I can, just really quick, she mentioned QuickBooks. In case, I know some of you are just like, oh, I don't really want to pay a subscription, anything like that. They also have free ones. Wave is actually free, and it does pretty much the same thing. So, I mean, just in case.
I would say diversify. The biggest thing that I see is that a lot of people, they know one thing about finance, and they'll just go into that one thing. And that's when we see trouble, right? Because all your money is just in one area. So what happens if that area gets affected? So my biggest thing is having my clients know, and I'm educating them on multiple products so that they could see that there's so much out there that we can teach them, and so many different ways that you can diversify your portfolio.
Okay, we are going to wrap this up. And you know this question because I told you each that I was going to ask. Give us one nugget. What is your one giveaway to us as your audience? What is your one giveaway to us today? Amanda.
I would say it's never too early to start, right? It doesn't matter your budget. It doesn't matter, where you are in your financial process. Start as soon as possible. Don't wait for years to go by for you to think that you have to have a certain qualification or a certain amount of money in your account for you to start planning. You can plan earlier. What do they say? A failure to plan is a plan to fail. Yeah. So I think that that's the biggest thing.
Thank you, Natalie.
I would say it's be proactive versus reactive, right? I think a lot of us, get very clammy around this time of the year because it's taxes. If you're proactive during the year, just keeping track of things and being organized, having conversations with professionals throughout the year, tapping into their brain. We're a community here at the end of the day. So, you calling me to say, hey, Nat, you know what? I want to do this. What do you think? Can I write this off? Or that's what we're all here for. So I think that, if there's one key takeaway is just be proactive during the year, ask the questions, so you don't have to be reactive.
Thank you, Natalie. Yumi.
I would say definitely along the lines of what Natalie just shared, specifically because don't wait to get audited or to almost get audited to start keeping track of of all of your finances, right? And that, I feel like we all here go hand in hand. And, just as she mentioned, I feel like most of my clients have the trust to just call, with any questions. Sometimes it's just like, hey, can I rent a room from, my space where I work? No, that's illegal. Let's try not to do that. So having that advice, having that guidance, just to help you along the way throughout the year, not just tax season, definitely.
Well, thank you, ladies, so very much. Now it's up to the audience. I don't know if anyone has some questions, but it's a good time to ask now if someone does. I think they did pretty good, but just in case they missed something. Yes, ma'am. That's a great question. And
That's
the
a
answer
great
is,
question.
oh, let it be yes.
We'll talk later. No.
So not fair. Come on, share.
So it all comes down. So for example, you have an event that you have to go to. It's work attire, So there is a deduction that you can take for that. Again, it all comes down to
How can we make it
exactly just and how you're documenting it, right? So one of the things that the IRS hates is people that just don't have anything. It's like you have $1,000 in work attire and you show them nothing. You produce nothing if you get audited, right? If you have, the event that you went to, what you purchased, in a ledger, in an Excel. That's how it could be tax deductible. So you have to tie it to something that it was for. Yeah.
I see us going to some kind of a black tie event, and I need a new dress, so.
I had a client ask me, he's like, I think I'm going to a wedding. Can I deduct the
A
tuxedo?
wedding's a
I
little
was like,
different, but I think, Laura
I was
has
like,
plenty
are
of
you
events.
actually going to a corporate event maybe? Or, a black tie, a gala for...
Okay. Well, that was a good question, because I didn't know that, so thank you for that question. Anyone else? Yes.
Lease it or buy it? So, go ahead.
So it's got to be between 6,000 to 14,000.
So did everyone hear the question? The question is, what's better, to lease the vehicle or buy the vehicle, and the weight of the vehicle?
So the question that Jenny is referring to particularly is a special bonus depreciation that the IRS has permitted in the last couple of years. It's winding down. It's 80% this year. It was 100% last year. So what that is you can buy any vehicle. You have to purchase it, and you can deduct 80% of it, of the cost of it, right? And what that is, you're depreciating it completely. So one special thing to know about that is if you're going into this whole realm of depreciating the vehicle and all that stuff, you can't double dip and also take mileage. It's either or. So you have to, and then if you've been reporting mileage for the last couple of years, you want to review that, because that's how the IRS is going to expect you to continue doing it. So maybe the bonus depreciation doesn't make sense. So you want to be careful with that. Okay.
Thank you. You had a question? No, all set? Okay. Come on, really?
Yeah, really? You're on the spot now.
No, that's okay. Does anyone else have any other questions? So I want to thank, whoop, oh,
Wave.
WAVE?
Yes.
Okay.
Oh, absolutely. It actually could be used for a lot of things, right? But mainly, we categorize all of your transactions there, right? That's why it's important to have a separate bank account for your business. So here we categorize all of your expenses and in which category they fall into. Sometimes you might not know, right? You can also track all of your loans, your personal loans, if you have any credit card payments. You can check, obviously, there how much you would have left, all of that. You can pull your profits and loss, your general ledgers, your bank sheets, pretty much anything that you can think of. It also, when you first log in, it brings you to a home page that tells you your expenses, are maybe higher than last month. Your income has increased by a certain percentage, things like that. Sure. Yeah, and it gives you like that automatic bank feed. So all you have to do is either categorize them or just create rules, right? You create those fun little rules, and those start automatically putting in everything that, if it's coming from Staples, it puts it for that office expense. If it's coming from the mechanic, it goes directly into your vehicle expenses, that stuff.
Yes.
Yeah, you can upload them. Sorry. I think you can. Honestly, I haven't checked, but I think you can.
Yeah, QuickBooks has gone through so many relaunches. It's actually very expensive nowadays, but it's a one-stop shop. It's you connect all your accounts, and that's the beauty of it. Because it's very different when, if you're managing a credit card, like Yumi said, loans and like your car loan, your bank accounts, you have a savings and a checking. It ties them all together, regardless of them being in different institutions. So it gives you that snapshot in one. So you get to maximize your time. You don't need it. I don't see it. At the end of the day, it's your credit card is tying it directly to what it's being spent on.
So that's the beauty of having this software, right? That because you swiped your card, you don't even have to worry about your receipt because it's already in the feed. It's already in the bank feed.
So it saves time. And
But at
then
the very least, you guys should definitely at least create an album or take a photo of your receipts, because a lot of people go out and they just get lost. The receipts don't even go anywhere, especially when you're new in the business. Your receipts are just gone, and
that's
then
a
you're
great
at the end
idea.
of the year, like going to your tax advisor with nothing, and that's the issue.
That is,
yeah, that is the
that's
receipt.
correct. That is your receipt. Yeah.
Correct.
I think it's just like,
I think to Amanda's point is that if you have it all over the place, that's where it gets messy, because you're not going to remember a year later that gas was for business. You're going to be like, I don't know,
Because the problem is, if let's say you're going to the gas station and you don't have it itemized and they just see a statement and your statement doesn't prove anything, you weren't at any business event, no anything, and you get audited, that's going to be a problem.
But if you're taking the mileage, can you take the gas as well? Okay, so it's one or the other.
Or so it's either you have to be able to sit with the auditor and explain to them that you use your car for 50% of the time. So you're allocating all your gas 50% of the time. You have to be consistent. The other thing is, if you're using one credit card for all business use and you're dedicating it to that, you just have to be consistent with the method that you choose. At the end of the day, that's what it is. Business expenses. And again, that goes back to one of the questions that we had on here about the LLC, right? If you have an LLC, you have a business account, the IRS will focus on the expenses on that business account. To Amanda's point, obviously they can always question, was this really used as a business expense, right? You went to Saks Fifth Avenue, right? They're going to be like, was this really a business? You could have paid it with your business account, right? So obviously you're going to tie that back to something, right?
Yeah, like just don't commingle, right? Like if you have your business expenses, have those in that business account. If you have your personal expenses, have that in that personal account, because the statements is always a problem. Like that's tricky, because if you see, let's say you went out to dinner with your best friend yesterday and then you went to a business, dinner the next day, they're just listed as dinner. You need to have that itemized, and not all of that is able to be written off, because if you had alcohol and you had drinks and all of those things, you're running a slippery slope there. So those statements is kind of hard. It's always better when you have at least a photo of the receipt, because now we can, protect you a little bit more. Now we can go back and say, well, actually this was a business dinner.
you can justify it. What I've started doing this year is just that. I've actually have a separate checking account and a separate savings account and a separate tax account. So my bank is like, how many accounts do you need? All of them. I need all of them. And now to their point about record keeping, just keep it different, right? You have your checking account, you've got your debit card, or you want to use a credit card, but use it solely for that purpose. So I am going to thank you for joining us today.
Jackie had a question.
Wait, okay. Yes.
Yours is a little different because you're an S corp, from what I remember that last conversation that we had, and you have your regular wages which go through your W-2, but then you also have your partner's distribution.
It gets a little dicey because at the end of the day, you're supposed to be within your retained earnings. So it's a little bit more involved. So you just have to be careful because there's certain restrictions from the IRS as an S corp of money that you can actually take out.
Yeah, and more or less they say, do that 60-40. So basically 60% your W-2, 40% your distribution.
We don't love the
Okay.
statements. Moral of the story, take photos at least, or hold your receipts. No one holds their receipts anymore, but at least take a photo.
So I'm going to thank you all for coming. And if there is another question, guess what? The panelists are going to be here. They'll be here for meet and greet. You can take photos with them. Thank you so much for joining us, ladies. I think you did a fabulous job. And thank you for being here, and thank you for coming.
Thank you for hosting.
Girls, you guys are fantastic. Thank you for our sponsors, and we appreciate you all. This is one of the benefits of being a member, where we, at least 4 times a year, we get to see all the benefits that Lord has to offer. We like to empower all of our members in every area that we can benefit from. Financial, insurance, bookkeeping, you name it, real estate. Is not only real estate, we make sure that not only our insurance agent, my card, like my glass card, got cracked, and automatically I went to one of our members that attended to one of our events, and he's like, oh my God, this thing does work. And I said, absolutely. We make sure that we are a family, and we make sure we give back to our community, and we network within each other. We make sure everyone is involved and empowered and benefit from being a member. So please share the news, share the information. It's $99 for the year, as everybody know, but we definitely obtain, and we receive more than $99 for the whole entire year, where we definitely increase our we maximize everything. We are passionate. We're Hispanics. We do everything with everything that we have. So thank you so much for attending. We appreciate you all. Thank you for all that great information. I gotta go get more bank accounts. Oh man. Enjoy the food, and thank you so much. We appreciate it.